if we have Palantir come down 40% from here, which is possible, it's not likely to me that is going to be a correlated event with Bitcoin coming down 40% at this point in the cycle. And so once these correlations break, for either lead lag reasons that Bitcoin's ahead or behind, it gives institutions a little bit more of an excuse, if you will, or a desire on an optimistic side to buy Bitcoin because it just behaves differently in the portfolio. So the most important thing for the institutional cycle of adoption for Bitcoin is that it needs to behave differently. Bitcoin came down like $35,000 or so in 40 days. If that happens, it means that Bitcoin can also go up $35,000 in 20 days. That's the kind of asset that Bitcoin is.
Bitcoin isn't a buy low, sell high asset. It moves on momentum. And after the October 10th liquidation, the market is testing every investor's patience. Where will the next bid come from, and who will step in? Jeff Park emphasizes that the liquidation left the crypto market in lingering psychological shock. Retail sentiment remains fragile, and uncertainty around institutional stability continues to suppress risk appetite. Bitcoin's drop into the 90K range and briefly below reflects a trend-driven market rather than a fundamental breakdown. Park views Bitcoin less as a traditional value asset and more as a momentum vehicle, rewarding strength over weakness. With sentiment weakened and potential insolvencies looming, investors are cautious, waiting for clarity before re-engaging. Park stresses the importance of microstructure and leverage flows in short-term price action. Perpetual futures and open interest act as the engine of crypto volatility. Since October, leveraged long participation has collapsed while shorts remain active, creating an imbalance that pulls prices downward. With few buyers stepping in, liquidity gaps persist, allowing continued downside pressure. Park notes that meaningful recovery will likely require institutional capital rather than retail activity, as leverage-driven optimism has yet to return. Finally, Park points to institutional investors as the key stabilizer for the next cycle. ETF holders have remained remarkably resilient, maintaining net inflows even during stress, evidence of long-term conviction. He believes the next uptrend will be led by investors comparing Bitcoin to assets like gold, Nvidia, or sovereign bonds, not other cryptocurrencies. However, these players need favorable macro conditions to commit in size. Until then, Park argues that patience and flexibility are essential as Bitcoin continues trading as a trend-driven asset in a period of elevated uncertainty. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Well, it's definitely a little unnerving. I think it was maybe 2 or 3 weeks ago when we first talked about maybe having to reset expectations for a price action to expect after the incredible liquidation event on October 10th. The truth of the matter is I still believe there is a lot of unknowns for the risk sentiment since that event. I do believe October 10th was pretty cataclysmic in the psychological effects it's had on retail investors, but also general long-term perspectives on what it really means to have an institutional crypto marketplace that otherwise might not be functioning the way people had hoped it to be. So these are big questions philosophically that still remain open-ended. And every now and then you still hear about market makers that potentially still may be insolvent that could come unearthed that is preventing risk-taking from happening. So I think we're still living through it. And I think this week more than others prior has shown you what crypto really can be at times, which is that it's a trend asset, right? I think we've talked about before. I don't tell people that Bitcoin's a value asset at some level because value means you buy low and sell high. But Bitcoin is not a buy low, sell high asset. It's a buy high and sell higher asset, which means you have to buy it in the momentum when there's a breakout. And trend signal breakouts is exactly how the market moves. When you saw the gap through the 100K floor, I think many then would have anticipated that we were going to be in a bear market trajectory. We are now, of course, seeing that in the 90K range. I think last night it even dipped below 90K. And so we're full swing in that mode of either disappointing panic or uncertainty to come. At the same time, look, anyone who's lived through these cycles know this is part of the rite of passage. And so eventually there will be new buyers and sellers coming at the marginal price in which they deem the price of Bitcoin to be attractive for risk taking. at the same time, we have to be patient and realize that we're right now in this period of great uncertainty, not just in crypto, but global macro at large. And then I'm reminded of a famous, well-known mantra in the trading community, which is, being wrong is acceptable, but staying wrong is totally unacceptable. And that's what we're now seeing at 90K, where people are thinking about rechanging their appetite for portfolio allocations towards potentially waiting for better entries for Bitcoin. And those things can actually catch a life of its own. And now you see some folks out there who are gunning for as low as 75K. And it's because you have the sentiment in which you want to be mentally agile and intellectually flexible, and recognizing, again, the core statement that I started with, which is that Bitcoin is a trend asset at heart. I think because it's such a technical market, it's absolutely key that looking at the microstructure is one of the levers in how you can anticipate at least short-term price actions. I make the distinction of knowing short-term price actions versus long-term price actions that can be accrued from otherwise trend building or mean reversion that is happening. But at the end, leverage drives crypto price. And so futures drives crypto price, and perpetual futures drive crypto price. And that's why people look at open interest. It's why people look at different liquidation levels across the perps. And what you have seen consistently, more so than the CME breakouts, is that there hasn't really been interest in levered long exposure since October. Again, it goes back to there's not a risk chasing appetite left in the crypto community, especially amongst the retail professional degen community, as you would call it, that would actually trade these open interest on perps. And so when you don't see that levered long stepping in, but you still do see a lot of the levered shorts kicking in, that imbalance does cause, I think, different kind of gravitational pools towards where there's liquidity gaps, right? Because these perps are always liquidated when they're hit because of the fact that it's meant to be like a tactical positioning. And so the fact that there isn't anyone stepping in to take levered long gives the shorts more ammos to continue to sell into that pressure. And it's now been consistently observed. We haven't seen that bid come in. And if there's no bid, I think we just have to expect the price will generally trend a little bit lower. Now, to the point about institutionalizing capital coming in, I think is the bid, right? So that's why people focus on the ETF flows, which obviously has been negative. It's why people have cared about what's going on in corporate treasuries. And it is why people care about kind of structured products adoption at large in Wall Street that can bring different kinds of Bitcoin adjacent flows. And so I think those are the right signals to watch, because you do want to get a sense for where the next bid will come in, and it'll probably come from that apparatus. My instinct is that there are folks who still want Bitcoin exposure, but they may have been waiting on the sideline, as always, to dip their toes in. And it's always a little bit easier when you're able to do it at levels where you know that it affords you a higher degree of margin for safety. And the truth is, the ETFs have actually been the most resilient holders. If you look at year-to-date flows across the Bitcoin ETFs, the net inflows versus outflows is absolutely heroic to these being long-term diamond hands. So I think the next upcycle we'll get will be at the benefit of these institutional capital that aren't taking leverage. They're taking multi-year views. And for that, we need a little bit of a macro reset as well, because those investors are not looking at Bitcoin versus, Zcash, ETH, Solana. They're looking at Bitcoin versus gold and Nvidia and JGB bonds and whatever else in that mix of global macro allocations.
Bitcoin has increasingly become a viable component of institutional portfolios, offering both core beta exposure and opportunities for relative value trades, such as long spot versus short futures. Jeff Park notes that large endowments, like Harvard's, have been investing in crypto for nearly a decade, initially through venture funds, and now see Bitcoin as a highly liquid and scalable asset. The market has matured, providing institutions with a variety of instruments, credit products, structured strategies, and derivatives that allow them to manage risk, duration, and portfolio exposure more precisely. Even large purchases, like MicroStrategies or recent $900 million buys by individual firms, demonstrate that Bitcoin's market depth can absorb substantial capital without causing liquidity issues. Park also highlights that Bitcoin's differentiated behavior relative to equities and traditional assets strengthens its appeal for institutional adoption. Unlike highly correlated risk assets, Bitcoin can show resiliency during equity sell-offs, offering orthogonal returns that diversify portfolios. He emphasizes that while Bitcoin's volatility may lag behind tech stocks or gold, its capacity for rapid price swings both up and down makes it a unique, trend-driven asset. Institutions are drawn to this combination of liquidity, differentiated performance, and rapid sentiment-driven movements, which creates the potential for meaningful long-term tail upside and sustained interest in the market. Let's get back to the interview.
Bitcoin could fit into that paradigm, right? It probably doesn't pay a lot to seek alpha for Bitcoin if you think the underlying core beta of Bitcoin is what you're looking for. At the same time, it's a great relative value trade if you could do the long spot versus short futures. And that historically is the trade that the pensions did on their balance sheet. I don't know specifically for Harvard's, but my guess is that would be the same because it is the kind of risk-free yield that sometimes exists in crypto episodically, where you can take Bitcoin risk in a different direction. That being said, I should also mention Harvard was an early investor in crypto. They sought it mostly through venture fund exposures, but they've been in the arena now for almost 10 years. So they know what they're doing. They're clever about a lot of different ways to access alpha. And nonetheless, it is still shocking to see that it is the number one line item because regardless of whether that's directionally long or it's market neutral, what that shows you is there's great volume and great liquidity and depth to the market that for a $55 billion endowment, this could actually show up as their top holdings and not cause any issue about liquidity concerns or things of that nature that, I don't know, 5 years ago, you wouldn't have thought it's possible. Yeah, I think there's definitely more choice available, and more choice means different kind of risk segmentations, different kinds of duration segmentations, different kinds of asset liability segmentations. So all of those in a way have different spot beta relative to, of course, the underlying coin exposure. At the same time, I think it creates an awareness that it's just a very dynamic market where the pin risks for different people's exposures are going to mature into a way that institutions can understand better than historically what crypto used to monitor. So again, like before these fancier products existed, all you could really get insight from trading crypto was looking at exchange volume and the derivatives market and looking at kind of the variety and characteristics of on-chain footprints. And those are kind of the big decision nodes that people would have. But now you do have other decision nodes that are big players. So for example, Strategy does now have a variety of different credit instruments. These credit instruments that are correlated to its Bitcoin acquisition strategies, depending on its price, which has coupons associated with it that has implications for the common stock. And the flywheel of MicroStrategy's Bitcoin accumulation engine at this point where volume is not as high right now is probably more significant than any other things that is happening. When Saylor announced last week, he acquired close to $900 million in Bitcoin, which is one of the bigger purchases in recent memory. That is still the most dominant news flow, in my opinion, as to whether there's a physical bid that's real or not in the marketplace. So yes, it looks different, but ultimately it does channel down into people who want Bitcoin exposure and Bitcoin risk. And that does have to come from somewhere. And it usually means that there is somebody buying Bitcoin on the other side of it. One area of hope is that it shows Bitcoin has shown still a little more resiliency in intraday price moves, as I can tell, away from other risk assets. So there's the possibility that in the equity market sell-off we might experience in the quote unquote AI bubble, that Bitcoin could still be indifferent to that outcome, right? So if we have Palantir come down 40% from here, which is possible, it's not likely to me that is going to be a correlated event with Bitcoin coming down 40% at this point in the cycle. And so once these correlations break for either lead lag reasons that Bitcoin's ahead or behind, it gives institutions a little bit more of an excuse, if you will, or a desire on an optimistic side to buy Bitcoin because it just behaves differently in the portfolio. So the most important thing for the institutional cycle of adoption for Bitcoin is that it needs to behave differently. It needs to behave differently than your equity book. It needs to behave a little bit differently than gold. And as long as that concept of some orthogonality exists, then there's a desire for it to be a part of somebody's portfolio. And so look, it's bad because it's not up as much as gold, or it's not, as volatile as Nvidia. But at the end of the day, these things are differentiated characteristics. And I think that means the long-term bid and the tail for that is ideally higher. So that's, I think, something we could be optimistic about. And the other thing I would just mention is, Bitcoin came down like $35,000 or so in 40 days. If that happens, it means that Bitcoin can also go up $35,000 in 20 days. That's the kind of asset that Bitcoin is. And so a sentiment change can be pretty quick, and that can be really more of a catalyst if we thought that it was a differentiated exposure.
Bitcoin's evolution highlights its unique position as a trend-driven, momentum-based asset that behaves differently from traditional equities, gold, or other cryptocurrencies. Its market depth and liquidity now allow substantial institutional participation, while structured products and derivatives provide tools for managing risk and exposure. Despite recent volatility and psychological shocks from major liquidation events, the asset continues to demonstrate resilience, offering differentiated portfolio behavior and opportunities for long-term tail gains. As adoption by institutional investors grows, patience, flexibility, and attention to market structure remain essential, with the next meaningful uptrend likely driven by capital seeking exposure to Bitcoin's distinct characteristics rather than short-term speculative movements. How can institutional adoption and differentiated market behavior influence Bitcoin's long-term price stability and portfolio role? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.